Some changes were announced today to Korea's tax code to boost the economy through giving more tax incentives. One of the main goals is to raise the global competitiveness of the nation's key industries.
Boosting the competitiveness of South Korean companies for stronger economic growth and helping people's livelihoods. This is what the country's latest revision to the tax code published on Thursday mainly aims to do, as well as prepare for the future.
This year's tax revision has put emphasis on providing strong support for South Korean firms to better compete in the global market, including those in the Korean content industries and national strategic technology.
One of the highlights would be sharply raising tax relief for Korean content makers so that more K-dramas, movies, and reality shows can be brought to the world. After the change, for expenses spent on content production, the government will grant up to 15% of tax credits for conglomerates, 20% for strong medium-sized firms, and 30% for small and mid-sized companies. The tax code revision also aims to provide higher tax relief for firms investing in the semiconductor industry and other strategic sectors that'll drive growth for the country, known as the K-CHIPS Act. Tax credits for conglomerates investing in chip facilities will be up to 25%, and small and medium companies will be getting up to 35%. Also, there would be greater tax benefits for companies returning to the country from offshore operations by providing them 100% of income and corporate tax cuts for the first 7 years and 50% in the following 3 years. Another major part would be reducing the tax burden for small and mid-sized family businesses when it comes to inheriting them by putting more companies into the lowest tax bracket of 10%. The term for payment will also be dramatically extended from the current 5 years to 20. With all the changes, the government says the tax code revision will result in a roughly $390 million drop in tax revenue. But the finance minister explained, although it is a difficult time, the tax incentives were allocated to much-needed areas, including prompting corporate investment and child subsidies.